Hey everybody, welcome to the market briefing for Sunday, May 22nd. We're going to take a look and see what was going on in the markets. We'll take a quick look at what happened last week and see if there's anything we expect coming up for the following week, for next week. But before we do that, we'll quickly look at our disclaimer here. As always, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading decisions are your own and done at your own risk. So what do we got coming up this week? So tomorrow, Monday, Canadian markets are on holiday. So I doubt that there's anybody here who probably only trades Canadian markets. So like me, you're probably working trading US markets as well. On Tuesday, we have flash manufacturing and services PMIs, which is PMI stands for Purchasing Managers Index. So those are usually pretty interesting. The market does often react to those a little bit. And then we also have Jay Powell speaking, although this one sounds very specialized, so there might not be much of an effect on the markets. The big effect from the FOMC is going to come on Wednesday when we have minutes from the last FOMC meeting. So this is where we get to see what they were actually talking about, how the votes went and whatnot. Although the votes are usually unanimous, they try and work it that way and try and come up with a consensus. So, but the market will definitely react to this. We'll be watching to see what are they talking about for the next meeting. Were they talking about a half-point rate hike? Most likely. Did they say anything about a 75-point rate hike? What do they think about inflation going forward? What do they think about a recession coming? What do they think about I think we're going to see the term soft-ish landing. That's been coming up in a lot of their Fed speak lately. So maybe we'll get to find out what a soft-ish landing is. On Thursday, we have preliminary GDP. GDP is obviously an important number for the economy. So we'll see just how much the economy is expanding, or is it contracting? Are we in a recession? I doubt it. The economy is actually pretty strong, contrary to popular belief, but we may see GDP pull back a tiny little bit here. Friday, we have core PCE. That is the personal consumption expenditures. It's very much like CPI, but it is it only measures goods that people consume, so that individuals consume, whereas the CPI is sort of a more sort of the wider economy. Apparently, the Fed really likes this index. And this is the one that they pay a lot of attention to. So, therefore, we should pay attention to it as well. So that's our week. I mean, there is some fairly important stuff coming this week, some stuff that could cause some volatility. So we'll be keeping an eye on that. Earnings season, continues to kind of wind down, but we've still got, a fair bit of stuff going on, a lot of retail stuff. And as you probably know, I mean, retail just got hammered on their earnings last week, with Walmart and Target, and then knocked down a bunch of the other retailers, like Costco, who has earnings later in the week. So Monday, tomorrow morning, before the open, we have XPeng. It's got earnings. We've got Zoom after the close on Monday. That should be fairly interesting. This Carmart here, some of these auto retailers have been kind of moving around a fair bit lately, been a little volatile, so Carmart might be interesting. Best Buy before the open on Tuesday. So we've got some more retailers again. If you look down this list, you see Abercrombie's in there. We do have quite a few retailers through the week. Canadian Solar has earnings before the open on Tuesday, and we'll actually be looking at this later because there's something going on in solar. We might want to be paying attention there. After the close on Tuesday, we have Nordstrom. You've got Urban Outfitters, some other retailers. Dick's Sporting Goods, this one's usually closely watched before the open on Wednesday. Some Canadian banks also on Wednesday morning. After the close, we have NVIDIA. I know a lot of us will be very interested in that, and the chip sector will be interested in that. Snowflake is one that people probably watch, and some others might be interesting. On Thursday before we open, we have some dollar stores, Dollar Tree and Dollar General. Also have Macy's. And Baba. Oops, I forgot to highlight Baba. Sorry about that. Yeah, Baba is going to be a big one. So Thursday before the open, that's a big day. There's a lot going on that one. And then Thursday after the close, we have Costco, Marvel, another chip company. And then that's about it. So fairly interesting week here for earnings. Okay, so let's take a look at the markets. We'll start with the major indices. We'll look at some important commodities. We'll look at the sectors, and we'll see if there's any nice setups. There might actually be a few setups, or kind of setups. It's still really risky, though, out there. So let's pull up that chart of the SPY. We always start with the SPY here, and you can see we are still firmly in a downtrend. We had drawn this line in before, and I guess we could almost have inverted that for this week. But you know what? Let's drag this over, because, whoops, not that one. That one. There we go. Let's drag that over, because I still think it's kind of valid. I think that when we start recovering out of this, whenever the bottom is, or whenever we get a rally, it's going to look something like this, what I drew in last week. So we'll leave that there. But you can see that, we started out the week, with a nice little move up, into our sort of pivot resistance there, and then on Wednesday had this big sell-off. It just sold all day long, relentless selling through the day. And then Thursday was a bit of an indecision day. An indecision day right near this pivot from the week before, and I believe that was Thursday the week before. But if we look a little closer at this, in fact, let's go to a 65-minute chart, actually I'll do a 30-minute chart, that'll be better. I think you'll find this interesting. Whoops, there we go. You can see where we came down to in the pre-market on Thursday morning was right at that previous Thursday's pivot. So it came right down there. It did a little double bottom thing in the pre-market, and then it moved up, and I thought, okay, it's game on here. This is really good. I thought for sure that we would, continue our way up after it did that. And then you can see that on Friday, most of the day on Friday, it sold off. And then towards the end of the day, it bounced. I want to actually zoom in here with a 5-minute chart in a sec. We'll go back to the daily real quick. And you can see that on Friday, we kind of sort of we broke through our pivot, and we came right down to this 380 level, or almost exactly 380, which is an important level going back to over here, and this would have been March of 2021. So going back over a year, that's an important level, and it found support there and immediately started to bounce. Kind of sort of drew a hammer. Some people are calling this a hammer. It's not really a hammer. If you look actually at the SPX, it looks more like a hammer. So this is a decent reversal or potential reversal that we've got going on here. Obviously this needs to continue, and we need to get up through this pivot and also through this resistance level before we can really start calling this at least a rally, even, I would say. Because we saw how easily this previous, what we were calling a bit of a rally, how easily that failed. So we can have a little bit of hope here, but we shouldn't be aggressively buying this just yet. We need to see more proof. Let's go to a 5-minute chart of 5-minute chart from Friday, and I want to show you why I'm fairly bullish about this move late in the day on Friday. So we have what is basically an ascending wedge here. Now, an ascending wedge like this is supposed to break out to the downside. That is supposed to move down. Come on. It's supposed to break out of here and, sort of move down, something like that, right? But it did not do that. It broke out to the upside quite nicely. And, you've heard that saying, you've heard me say it, from failed moves come fast moves. When we're expecting this to break to the downside and instead it moves to the upside, we get a nice fast move out of that. And you can see that it sort of grounded up through the after hours ever so slightly. So this is a fairly bullish setup, in my opinion, for Monday morning. We'll have to see, though. I mean, who knows? Anything could happen. There could be macro events over the weekend, and still to come. Hasn't really been anything that I'm aware of that is a major market mover over the weekend so far. But it's still late in the evening in China right now, so that's where usually the big news comes from that can move the market on a Monday morning. So we'll see. We'll see what happens on Monday morning, but I'm pretty hopeful for tomorrow. So what about the Qs? Similar price action in the Qs, and better looking hammer on the Qs. Still in a downtrend, obviously, and still a lot of work to do here, but it wasn't a nice intraday reversal on the Qs as well, so we can be hopeful for a continued move on Monday. The Russell 2000. Now I want you to notice how the Russell 2000 has been outperforming both of the other indices. Notice that it didn't even come down to last week's low. It reversed before that. And it reversed just above this important support level from way back in the past. So that's interesting to see. And if we were to dig into, if we get a little farther into the IWM, for instance, IWC, the microcaps, we see that outperforming as well. So outperforming the NASDAQ and outperforming the S&P 500. And we can see it in the IWO, which is the Russell 2000 growth. Nice hammer candle there as well. So obviously still work to do, but this is nice to see. It's nice to see these small caps outperforming their larger cap cousins. The volatility index. So we'll look at the VIX. I kind of noticed that we've sort of drawn this big box or a great big base here, and you can see I've sort of drawn that in. So we've got this great big box, and then we've sort of got a box within a box, or a base within a base. And how I like to see, when a stock has been in a downtrend and it starts to consolidate, and then I like to see that consolidation move up into the top half or top third of the consolidation, kind of like what this is doing. Only problem here is this is not bullish. We've got to flip everything on its head, right? If the VIX is going up, the market is going down. So while this is sort of bullish for, if you're playing the VIX, it's not bullish for the market. That being said, I'm not putting too much weight into this, but it is something I'm keeping an eye on. And if we want to be bullish on the market, we can see that we continue to put in lower highs, right? We drew this little trend line in last time, and we've continued to put in lower highs, so that's great. So we would like to see this continue to trend down. The 10-year yield, interesting. Something really interesting going on here as well. Anybody else see that head and shoulders pattern there? That is quite fascinating to see. I mean, we were I was talking last week about how it was feeling a little toppy. And this week, it's put that right shoulder into this and gives us a target of around 240, 241. That is actually a fairly big move for yields to be taking. So, what would we need to see to make this happen? Either the market gets really sort of a little more risk off and money actually starts moving back into bonds. That would bring our yields down. The other thing that could happen to bring yields down like this is a lot of foreign money leaving the U.S. bond market. And we would see that in the dollar index, and we would probably see that start to play out in some of the other countries around the world, other country indices. And so let's take a look at that. Let's start with the dollar index. And oops, I need to go over to, there we go. And we see that, after trying to break out, and we talked about this breakout and a little tiny pullback last weekend. Well, this pullback continued, and it came right back down below this important level, this 103.80-ish level, and now we're down near 103. It's nice to see the dollar index pull back. Because the dollar index pulling back is sort of good for the rest of the world, and it's good for commodities as well. So let's look at the rest of the world. So this is the EFI. Oops, let's go back over here. This is the EFI ETF. This is Europe, Australia, and Far East. So these are developed countries in Europe, Australia, Far East. And we can see that outperformed the S&P 500 nicely this week. Just to go back, let's take a look at the S&P 500 again really quick. Okay, S&P 500 was going down pretty much all week. This ETF, representing a good chunk of the rest of the developed world, this has been trending up now in the very short term. Sure, in the intermediate term, it is definitely still in a downtrend, but this is really interesting here, and this is definitely something to watch, because this might be saying it's time to diversify some of your capital into other areas of the world. So I'm going to be watching this closely. I'll also be watching EEM, which is the Emerging Markets ETF. And you can see that one has also been outperforming these U.S. indices. Still in the downtrend, of course, but this is interesting behavior here on something that has been in a downtrend for a long time. It's interesting signs of a bottom, where it really kind of needs to start putting in some work and bottoming out here. So I'm going to be watching this closely. So that one is EEM for emerging markets. Let's move on to our commodities. Actually, let's go over here. So this is our basket of commodities performance here. You can see if you were in lean hogs, you were pretty happy this week. It's really kind of a mixed bag. It's all over the place. We've got natural gas up in second place. So we've got some soybeans and some agriculturals. We've got silver did all right. But then, it's interesting, natural gas way up here, and then heating oil way down near the bottom, underperforming. So there's a really unusual mix of performance across the commodities over the last week. I'm not sure what to make of that. Let's go back to our charts and look at we'll look at gold here. Gold's kind of maybe it's trying to bounce off of here. But it's come up and seems to have stalled in that, underneath that former uptrend line and right at this downtrend line. So this could be an interesting couple of days for gold. Silver, if this will pop up, silver has moved up into fairly strong resistance. So it'll be interesting to watch this. If this can break through, gold probably goes with it. The gold miners, I don't think there was anything exciting going on here. Yeah, look, similar to the metals that these guys are mining. Copper is kind of meh. It's got a bit of an ascending wedge, and like we talked about earlier on that 5-minute SPY chart, we would expect to see the ascending wedge to break out to the downside. And this definitely looks like kind of a bear flag too, right? That could be really bad news if this broke out. If this broke down here with some momentum, this could be really bad news for copper and for some of the miners. Freeport is one of those miners, and you can see that it had a bear flag that we were watching, and now it's drawn another bear flag, a little bit of a pennant here. So we would expect to see this one drop, break out to the downside. So that does not bode well for copper. TECK. another one of the miners. This one is doing much better. Still hanging on to this uptrend line, and you know, drawing a bit of a symmetrical triangle here. And in this context, in the context of this being in an uptrend, we would expect this to break out to the upside. So a little bit of a divergence going on between, you know, some of the metals and some of the miners here. Uranium is still kind of doing nothing, but I kind of feel like we shouldn't take our eyes off this thing. You know, we had to sort of build this base or this box here, and it broke down out of that. It's building another box here, you know, right on what should be a fairly strong support area. So yeah, I kind of want to watch and see. And by the way, this is the Sprott physical uranium ETF. Cameco, the biggest uranium miner, it's got an ascending wedge, and again, we expect to see that break out to the downside. So it kind of some mixed signals we're getting out of these things. The commodities, general commodities ETF, this tracks the futures on these commodities, still hanging on to this uptrend, but still has overhead resistance. That resistance is still holding, so you know, we want to see a breakout to the upside here. We don't want to see this roll over, because I think if this rolls over, we could see commodities. We could see a bit of a rout in commodities if that starts to roll over. So that's the general commodities. This is the DBA is the agricultural commodities. And we can see that this is still hanging in near highs, but it's choppy and messy. Had this big gap up, and I think this was on something to do with wheat or agriculture exports from a large exporting country. I think they banned exports of wheat or something. Nonetheless, this is choppy, really choppy in around a top. So tough to say where that goes. Moo is the agricultural companies, not looking terribly healthy here. You know, looks similar to the market. Corn looks to be, you know, this looks to be in a kind of a stage 3. You know, where if this were stage 1 in here, and then you know, this is our stage 2 appreciation. Then now we're into a stage 3. We're getting ready to roll over into stage 4, perhaps, which is, you know, your decline. Or it's building a base for another leg higher. If it breaks out the top of this, I'm going to be bullish on corn. But otherwise, I'm very cautious. Soybeans, kind of a similar thing, you know, getting messy here, looking a little toppy. And then there's wheat. And, you know, wheat did have that big move up, and it moved up out of that ascending wedge, which we would see, you know, expect to break to the downside. Now it's rolled back over and moving back into that wedge. So it'll be interesting to see what happens there. Let's move on to the energy sector. Or actually, we're going to look at our sectors in general really quick. So let's look at the weekly and monthly here. So on a weekly performance basis, basic materials was the big outperformer, and energy and healthcare. We can see that anything to do with consumers did really poorly, especially consumer defensive. And now consumer defensive, I mean, this is supposed to be a safety sector. This is where we go in times of danger. This is the place that was dangerous this week. Consumer cyclicals were very poor as well, and so was technology and communication services. So, you know, it's showing us again, commodities have been the place to be. So let's take a little closer look. So the energy sector still hanging out up near highs, uptrend is still intact. You know, all else being equal, we would expect to see this continue to move to the upside. Oil is looking better than it was last weekend. Oil is making a move, you know, up near the top of this range, right up near the resistance level. And, you know, I like to see that. I like to see these consolidations just below resistance, because usually they break out and move strongly from there. So yeah, I wouldn't be surprised to see oil move back, move strongly again this week. Not sure if it's going to be stronger without a major catalyst. I don't think it's going to be attacking 130 this week, but we could see it start to move up into there. The oil producers still near the highs, still kind of a little bit choppy, messy, maybe acting a little toppy in there. But if oil goes, then these guys are going to go too. And oil services. Kind of choppy. Not surprising, even with oil moving up. When the market's been as weak as it has been, it's going to be hard for these companies to move up much. We've got Occidental Petroleum still up near the highs. It had pulled back a little bit after trying to break out. Exxon, it's also near the highs, hanging around this breakout level. If oil moves, I'd be watching Exxon closely, because it could really start to move and break out of this pattern it's been in now. And the one I mentioned that last week that I'm in, Dorchester Minerals. This is also hanging out up around highs. Had a little pullback, from that strong move, but it looks like it's starting to move up again. Which is great because it's starting to move right off that resistance level. It's actually that should be right there. Bounced right off of this former resistance. So this should probably continue to move up. The coal's not doing much, but they are hanging out near the highs. But yeah, I don't know. I think coal's had its day. Metals and mining ETF. This is drawn a couple of boxes to the downside here. So it's coming into what should be fairly strong support. So we might see this actually turn to the upside here. Industrials firmly in a downtrend. Had kind of a hammer candle, bullish hammer candle, but we'll have to see. That's quite a downtrend it's got going on. Consumer discretionary obviously had a rough week. It's still firmly in a downtrend, but had that nice reversal with everything else on Friday. Retail just got smoked. I wouldn't be expecting to see. I wouldn't expect much out of retail, at least in the first part of the week. We've got more, a lot more retailers with earnings coming, but more specialty retailers though this week. So maybe if the specialty retailers is still doing okay, maybe we see consumer discretionary and this retail ETF, have a nice bounce. Costco, which has earnings later this week, this got smoked this past week. Big gap down, continue to move lower. Really disappointing for Costco here. We'll have to see what happens when it has earnings. This 395 to 400 area should probably hold unless their earnings suck. Financials, still in their downtrend, not looking great, but had that same reversal candle everything else had over the weekend or on Friday. Materials sector. This was, kind of the outperformer for the week, right? You never know it by looking at this chart, but yeah, maybe it's drawing a base here. Technology did not have a great week, although it bounced kind of right where it needed to, right? And we had that nice hammer candle on Friday. Semiconductors. Semiconductors have been looking more, this bottom, it looks like more of a bottom pattern here in semiconductors. They broke down, below that kind of little double bottom there, and broke down and immediately bounced back up and actually had a fairly strong recovery. Had a bit of a pullback with everything else, but nice strong hammer candle on Friday. So this could be interesting here. Definitely worth watching the semiconductors. We'll take look at a couple of these really quick. AMD looks kind of similar. You know, nice bottoming action here. This 85 level is holding really strongly. And you can see on this pullback at the end of the week that we had, it didn't even get down to there before it bounced. So that's fairly bullish for AMD. Micron, same sort of thing. Now, you know, triple bottom in Micron here. And you know, came back up into this, or very near this resistance zone. We've got to get out of here, though. We don't want to be spending all this time down here. And, you know, this is a nice looking candle to kick off a bit of a rally. See what happens. You know, rally up to, say, 76. Maybe stall out there and then rally higher. You know, if it can go to 76 and not pull back too much, I would be very bullish for a break higher. Let's draw in what that might look like. You know, so, you know, a nice move up into here over a course of a couple of days, and then spend a little bit of time there and then break out higher. It's perfectly reasonable, I think, to expect something like that. But if you're going to play it, be careful. Tight stops on all these things. Communications. Maybe it's putting in a bottom here. You know, we did have, you know, we've got this level going way back to, when is this? Yeah, June. Oops, sorry, no, wrong one. This would have been the July level, yeah. July of 2020. And it bounced right there. And came back and has now tested it and bounced again. That's pretty bullish, right? This does look like a double bottom, and it looks like a nice setup to move a little higher here. But obviously, this is going to need help from the overall market this coming week. But yeah, this looks fairly bullish for at least a rally anyway. You know, I'm not calling a bottom in any of this stuff, but you know, we are setting up for a rally, and we're setting up maybe for a potential bottom. We've been fooled on these things before, though. We've had lots of other patterns that have looked like, you know, potential bottom, and they've all failed. So we've got to be really careful still. Facebook, you know, this is putting in some fairly decent bottoming action, but it also looks like if this breaks down out of here, it could get ugly in a hurry on Facebook. Apple, what the heck, Apple? We've got, you know, this is not looking good for Apple, and if Apple continues to break down, it's going to take the market with it. So Apple needs to get up off the mat here. We do not want to see continued downside. But, you know, it looks like it could easily have another, you know, $10, $15 of downside here, quite easily. You know, into this 125 to 120 area. We don't want to see that. That'll bring the market down with it. Amazon not looking terribly pretty either, if I remember correctly. Okay, yeah, kind of maybe bottomy, but it's got to move. This has got to go on Monday. We don't want to be looking at more down here. Netflix. You know, Netflix this is interesting out of Netflix, right? It had a nice move up when the rest of the market was just selling off all day long. Yeah, Netflix sold too, but it recovered from that fairly quickly. And you know, it seems to me that you've got fairly tight risk reward here. If you were wanting to play this, I mean, you know where your stop has to be. You know, that's a bit of a no-brainer, and it's fairly tight here, because this could see a fairly strong move out of here, at least up until, you know, 240. Go and test the bottom of this gap. So well-defined risk reward on this. I'll keep an eye on it. I'm not sure if I would want to play that or not, though. Google. Google came right down, touched this level from way back in this. I think this is also July. Oh, this is April 2021. So April of last year. Touched that level perfectly and bounced. That's what we want to see. Now it's got to keep going, right? It's got to show that this is a reversal candle by continuing to move up here. Tesla, not terribly pretty. Broke down through this 700 level. Even got through 650. But they did start buying it late in the day. But you know, this could easily come down and start testing this, you know, 560 area here. I'd be really surprised if the 560 broke. I think there's going to be a ton of buyers, and they actually probably start to front run it. You know, so 600 should hold fairly well. 600 to 690 should hold fairly well if it comes down there. You know, and you can see we'd kind of drawn in what does a rally in Tesla look like, and yeah, I don't know. I think we should just delete that, because I think that we're going to see this market rallying in other places, and maybe not so much in Tesla. I think Tesla's going to lag here, at least until Elon shuts up. Sorry to offend anybody who's an Elon fan. I mean, I'm kind of an Elon fan too, but there's a lot of negative news coming out about him. You know, now there's sexual harassment. It just seems, you know, all the news flow with Twitter, and he's kind of making himself look like a bit of a fool there. Yeah, and the media is all over it. You know how the media loves to knock people down. You know, they built him up, right? And they love to knock these people down after they've built them up. So, yeah, I think Tesla could be in a bit of a rough stretch here. And I think Elon's going to be in for a bit of a rough stretch. But I don't think there's a ton of downside. I just think it's going to lag the rest of the market. I think there is better places to go and play right now. Healthcare. Healthcare has been doing okay. It's definitely been outperforming. So, you know, this looks like could be a bottom in this. And this 125 level, important support level, that held. Biotech, that's built a little base. So it came down here, it's come back up, and it's built a little base, and I would argue that this is a playable base. You could play this either way. You could, you know, if it breaks out of the top of this, you could go long. If it breaks out the bottom, you could go short. Now, this is investing advice, of course. I'm just, you know, pointing things out. It's nice and tight. It's risk defined, right? And it's hard to find risk defined trades in this market. So this one, the biotechs, might be interesting. Whether you play that with the biotech ETF or you go and find your favorite biotech company, if it looks kind of like that with a nice tight range, might be worth playing a breakout. Pharma, bit of a similar thing. This actually had a stronger bounce off these lows, and we've got now a series of lows. You know, so it really looks like there was a buyer here at 38. Somebody is supporting that at 38, and it rallied strongly off of that level, and now it's drawing another bit of a consolidation. If it can break out here above 42, could be good for a decent move. Eli Lilly is one that we were watching. And it kind of like it faked out, pulled back in, seems kind of, you know, sort of trapped in this range, looks ready to break out of that original range again. I don't trust it so much. Like, I do think this is going higher, but I don't trust playing this. You know what I'd like to see? I've drawn a little box up in here. I would like to see this breakout, move up, and draw a little consolidation in here for a week or two. And then a breakout of that, I would be all over that. But for now, I'm just watching it. REITs. I don't think REITs were doing anything exciting. Yeah, maybe they're bottoming here. You know, double, triple bottom maybe. Maybe they're getting themselves set up for a breakdown lower. But if they're going to support, I mean, they should find it there. Consumer staples obviously had a really bad week, but they did come, you know, find some support, maybe drawing a hammer candle in an area where we see there should be support in that area. That area though is a fairly wide, you know, support zone in here. It could go from like here to here kind of thing, right? So you could have moved lower without violating any support. But it does have a hammer, and we would expect that now to move up. What else have we got? Utilities. Don't think these were very exciting. Yeah, utility. Oh yeah, I remember now. So utilities is like continuing to draw this base. It's in this box, just in this range, going back and forth, and that's kind of like what staples looked like before they broke down. Right? See, you've got that sideways range after kind of moving down a bit. Staples totally broke down. Is that what's going to happen to utilities? I don't know, but it's something to watch out for because they're both very defensive stocks. They both have had very similar patterns where they had a strong run up and then a fairly quick move back and consolidate. Staples broke out to the downside. Utilities is not broken down yet, but I would be really careful if you're in utilities. The final one is we got home builders. Not looking great, but when they broke down out of here, they didn't really break down too far. So, like we might have expected this to break down quite quickly, and we have this hammer candle here now. So, probably going to move back into this range. And this may be a range that lasts for a while. What else? Okay, so some interesting stuff going on in solar. I'm just not sure how to play this. Is this the left shoulder and the head of a potential head and shoulders bottom? It still means that we have to put in the right shoulder, right? That would look, that could look something like this. We put in the right shoulder, then we break out. Or does this continue up through this resistance right now? It's hard to say, but you can see why I might be interested in this. There is relative strength here. It has been doing quite well compared to the market and most sectors. So yeah, solar is something I want to keep an eye on. We can take a real quick look at some of the stocks in that space. Sunrun, they just had earnings, and they've bounced off their low and moving up, sort of in the resistance area, just like the TAN ETF. SunPower is another one. Very similar sort of price action here, stalled out of the 21-day moving average. And like I said, I'm not sure how to play this. This is not a good setup, but it's definitely something worth watching. Canadian Solar, they have earnings on, I think it was Tuesday or Wednesday. So you got to watch out for this one. Dangerous to just be jumping into this right before earnings. But maybe this is the one that, if they have really good earnings and this one gaps up, the rest of the space may follow. So maybe you want to watch Canadian Solar. You're probably not going to, if it's really good and it gaps up, you might not get to play it. But that's when you look at the rest of the space. And maybe look for the ones that haven't quite moved yet. Maybe there's a bit of a delayed reaction on some of those, and that might be a way to play it. Also saw this GOGO. I don't know anything about this company. Apparently they do wireless telco. But this one really interests me. If the market gets going, I really think this one goes, because if you look here, this has good relative strength compared to the market. It hasn't really pulled back all that much with the market. And these are the kind of stocks that once the market gets going again, once this bear market is, starting to end, these are probably the kind of stocks that get going. So you can see we had a nice move up, pulled back. We've put in a nice base here, right where it should. I'm going to be watching this for a move out of this base. And again, this is another one that's fairly well risk defined. I mean, the range is fairly wide, but it's definitely risk defined. If you buy a breakout here, you're putting your stop down here, or maybe in the bottom third ish, just under 18 in this consolidation. So yeah, this one is interesting to me, and that's GOGO. If anybody knows anything about this company, because I haven't had a chance to look at any of the fundamentals yet, let me know in the maybe your tickers you're watching or something, if you know anything about this company. And here's another one that could be a nice little risk-defined play. You're probably shocked to hear me mentioning PLTR, because I have dissed on this company a lot in the past. But this looks like an interesting pattern to me. Again, very risk-defined. We had this gap down on earnings. It bounced up and it started to consolidate sideways in that gap. Say any breakout here, a breakout from 850-ish easily goes to the top of the gap. So that's $1. So $1 on an 850 stock, that's a nice move. That's very playable. You know, when it comes up into here, probably finds a bit of resistance here, but who knows? I mean, you could get a nice short squeeze, and oh, it's not showing me the short interest, unfortunately. There's got to be a lot of shorts in here, and I think you could get a really nice short squeeze going. So let me really quickly check the see if FinViz has any short interest on this. Oh, it's saying only 6.5%. That really surprises me. That feels really low. I guess maybe all the shorts have already covered. Okay, so short squeeze may be off the table if these numbers are correct. That's something I want to look a little deeper into. But yeah, looks like there could be a play. Nicely risk defined anyway. And that's it. That's all I've got for you for stocks to look at. Coming up this week, we have on Tuesday the Kahoot trading trivia contest. That's going to be a lot of fun. Really looking forward to that. And then on Thursday, I have Ticker Talk. So hope everybody enjoyed this. And enjoy the rest of your weekend. Have a good Sunday night, and we will see you again soon.